Hello and welcome back to Stock Market Weekly. I am your host, Evan Medeiros, for Friday, October 18th, 2024. Thanks for joining us once again. This is the show where we break down all things financial markets through the lens of technical analysis. We got plenty to talk about today. Some of that includes crude oil. Big story this week, seeing a sharp reversal to the downside, maybe some demand that's not quite there, maybe not as big of an issue over in the Middle East as we may have thought on the impact of supply. We also had lots of volatility in semiconductor land. We had guide downs from ASML. We had strong numbers out of Taiwan Semi, really sort of leaving some volatility in two-way trading in that space. We've got Bitcoin, which is now back to its year-to-date highs, or pretty close to it. We're not there yet, but we're getting close to knocking on that 70K big round level. We've got small caps kicking into gear. We've got gold, which is up more than most stock markets this year, up over 30%. Silver starting to join in on the race as well. And we also have some more volatility out of China. Lots to talk about. Stick around. Let's get into it. All right, now for you new users joining us for the first time, we are using Warden TC2000 in this video. It's a platform we support here at The Trade Risk. We've got a referral link in the description of this video. We've also got lots of cool downloads, customizations available for TC2000 on our website, thetraderisk.com. So check it out there if you're interested in a new platform or getting a little bit more out of TC2000. So let's get into the numbers here for this week's market analysis. Take a look here on the 1 week returns. You can see it was green across the board. The Nasdaq lagged a little bit and the Russell 2000 outperformed. Now, the good thing this week was that we finally saw a little bit of volatility start to unwind a bit in this market. It's been elevated. We've been on kind of an edge here, kind of climbing that wall of worry. I think that was one of the headlines we used in one of our recent Stock Market Weekly videos, but we are still at, slightly elevated levels. We do have earnings season that we're in the midst of. We do have a lot of geopolitical uncertainty. And then, of course, we've got the US election. So maybe rightfully so that markets are up. But remember, last week we kind of had markets up and volatility up. It's not quite the case this time around. Now, if we take a look here at sectors this week, we saw a nice kind of continuation here, or some strength in utilities. They've been super strong over the past year, basically. You can see up 38%, not too shabby for XLU. On the second spot here, real estate climbing back a little bit. That got hit hard with that sort of knee-jerk reaction higher in interest rates. Well, that started to rebound this week. And also financials continue to do very well in this environment, up 2.39%. Energy was hit the hardest. Honestly, not that hard. I mean, when you look at the magnitude move in crude oil, XLE down 2.66% feels like a win. Healthcare down slightly this week, and tech was up just slightly. Take a look at our smart trend filters here. There's really not a whole lot of new information or new signals. We're mostly strengthening out in some of the uptrends that we've had in place. You could see consumer discretionary and real estate started to turn up later this week. Now, let's take a look at market breadth, and you can see we are still seeing just a supportive market environment here. I don't think there's been too much misinterpreting these types of numbers, more recently here. It seems like everything underneath the hood is starting to kind of fire on all cylinders. I think there's some maybe questions about maybe large cap tech and some of the big mega caps, but in terms of the broadening out story here, the Russell 2000, which is something that we've been talking about for the past 3 weeks, 4 weeks as a trade idea, really starting to get into shape here. And you can see we're still getting some good strength underneath the hood. Now, I do want to take a pit stop here. IBD, Investors Business Daily, shout out to them. They do sponsor this show. You can support the show, support IBD with a link in the description of this video. This is their IBD 50 list. This is the top 10 on the list. It updates every single day, and you can get access to a nice curated, tight list of strong fundamentals, strong growing stocks, updated every single day. Use that link in the description of the show. Thanks so much, IBD. Now, let's go to our final data slide here, and then we'll jump into the charts. You can see that we had another week of dollar up. The dollar has just been on a monster move up. We've seen in the last basically month it go and retrace three and a half months of decline. So from the July highs, we're basically right back up there. And like we talked about, interest rates, the 10-year Treasury yield has been moving lockstep with it. Now, the Treasury yield was pretty much flat this week, the 10-year that is, which is, I guess, encouraging to see, especially if you're more of a growthy investor here looking for cooler interest rates, perhaps. You can see it going sideways. Will be interesting to see if we can roll over here or if this is a pause before a second leg higher. I think that would put some stress on different areas of the market, but we shall see. Now, if we take a look at commodity land, you can see that Bitcoin was the top of the list here, followed by silver, gold, and then we had copper and oil in the red. So let's get into those charts. Let's take a look here at what's going on. We're going to kick things off here with the S&P 500, and we'll switch over to a weekly time frame. So here we are once again, like we seem to always say in these videos, all-time highs for the S&P 500. The bull train continues. You can see a smaller range than last week. Last week was sort of that breakout week to the upside, and this week we more so grinded higher here. Don't forget, we do have earnings season that we are in the midst of now. We haven't really heated up to the big heavyweights, but we did get Netflix. We did get a lot of mega cap banks. We've getting some other companies that are starting to trickle in. So the market will certainly be digesting that. But when we take a look here just at the daily chart now of the S&P 500, you can see that it's kind of on an orderly sort of grind here. Maybe it's back to that climbing the wall of worry. This is just, again, a little more orderly. It's not as accelerated. It's not frothy. It doesn't feel like a blow off or anything too concerning right now. Obviously, when we look at the weekly time frame here, we are up, I believe, consecutive here, all the way, what is this, 6 bars? No. Let's see, 1, 2, 3, 4, 5, 6. Yeah, 6 bars in a row, 6 weeks in a row. The S&P 500 has been up. Really, if you take out the week before that, you could say that we've been up 10 out of the last 11 weeks for the S&P 500. Now, of course, I'm cherry picking that from August lows, but needless to say, it's been a nice but pretty aggressive rally higher here in the last couple of months. So let's keep that in mind. We are obviously driving into some the elections, which is certainly going to be a catalyst for the market. Depending on the outcomes there, depending on Senate and House, depending on how fast the elections get processed and we have a winner declared. All those things are going to be certainly variables that the market is going to be chewing on in the coming weeks, but we still have, roughly 2-3 weeks away before that time. So when I look at the S&P 500, I don't have a whole lot to add here. We're basically at all-time highs. Volatility is starting to come down a little bit. We've got earnings season, so that's, again, going to be front and center, but technically it's holding up. I'm still going to use this line in the sand here that's been on the chart now for several weeks. I think this would be an important 56, call it 75 here in the S&P 500, an intermediate term level to be paying attention to. If you're a shorter term trader, sure, you could look at, say, the recent lows here around 5,800. If we start crossing or breaking below that, expanding below that, reversing with volume, then you've got some signs of warning. But until and if that happens, things are looking quite good. Now, if we go to the Nasdaq 100, you can see that the Nasdaq 100 is, maybe a little more problematic. I mean, that's not new information either. We've been talking about how the Nasdaq 100 on a relative basis is just not as strong as the S&P. Technically, it's been getting its act together. I don't love the ranges we saw this week. So again, you can see this again comes in with our semiconductor news that we're going to talk about in just a little bit. But we did get some volatility earlier this week on Tuesday. And then, we had some wider range trading here going on. And notice we're not quite back at these highs. So things are getting a little bit more sloppy. It's becoming a little more evident here that the Qs are just kind of wrestling with some slightly different dynamics. And we're going to want to keep an eye on that. We do have a position here in the Qs. Our Galahad trading system is a long-term trend following system. So it owns the Qs. It's had the Qs for a while. It would get out of them if we see, breaks. I don't know what the current levels would be, but if we start losing not too far below where we are, we could start to see exit signals there in our long-term trend following system. But for now, that system is forgiving. If you're a shorter term tactical swing trader, you might have tighter risk policies on Qs. But for now, it's, kind of glass half half empty, I guess, depending on how you want to look at it. But of course, Microsoft, Apple, Nvidia, all those big earnings, which will be coming in mostly 2 weeks, will be a big catalyst there. Russell 2000, this is what I've been pounding the table as kind of the opportunistic spot to be, is looking pretty strong. So this week, again, it was the leader, was up 2%. It's basically, at cycle highs here for this year. It's kind of consolidating right back up at this level here, technically right above the July highs. Now, full disclosure, I did take some profit on this day here on the Russell 2000 trade I put on. It was really TNA was what I had purchased back on this session here. So I am kind of half out of this position. I still like small caps. Merlin, our other trading system, has a lot of exposure in small cap land, but there's just lots of things working right now. So I took some chips off the table. I still like the broader pattern. If we throw on Bollinger Bands here, you can see we're kind of just sitting at the upper one on the weekly chart, starting to expand up nicely, which is what you want to see. So I still like IWM on a relative basis across all the major averages. Let's keep things moving. Let's take a look at crude oil now. So crude oil, this was the weekly bar, easy come, easy go. So remember, 2 weeks ago, we had crude oil up 8.6%. Huge move. One of the strongest or sharpest moves for crude oil that we've seen in years. And we kind of digested that last week, and then we gave almost all of it back this week, down 7.8%. So USO kind of back into the same place it was 2 weeks ago. It's in this kind of sideways range here. Again, sort of was impressed with how well XLE held up on a relative basis. Notice if we take a look at XLE, it's holding in the top half of the kind of breakout bar that it saw 2 weeks ago. So from a company perspective, looks like the stocks are sort of digesting this move in USO a little bit easier. I still think XLE is an interesting spot to be kind of fishing and looking from. If you recall, we did this analysis here where we saw that the XLE really hasn't gone anywhere in 2 years. And if it can start to get some legs and start to get some momentum and breakouts and follow through, this could be an interesting spot. Obviously, this type of week sets it back, but I wouldn't count it out yet. I think it's still a place to keep watching. So that's oil. If we go to commodity list right down here, we can see gold, which continues to look like a tech stock. You can see, pretty good volume coming in on Friday, push to new highs here. If we look at the yearly returns, up 31.44%, very nice spot to be, and continues to work. It's extended, it's a little frothy now, but we say that every time it goes on a run, and then it digests, and then it breaks out again. So eventually this will have a longer corrective period, just doesn't seem like it's right now. Silver, take a look at the volume coming in on Friday, breaking out, clearing resistance here. Beautiful pattern. We've talked about SLV. Weekly chart looks like clear skies ahead. Looks like some great, bullish trends developing in the metals. And you could throw Bitcoin in that as well. Let's actually go to our Bitcoin slide here. So Bitcoin, you can see on the left is the spot price. So we're hanging around 68.5, so we're not quite at that 70 level, but that's certainly what's going to be, on everyone's radar here in terms of momentum, in terms of a breakout. I think 70K is roughly it. Of course, we were higher than that in March, April, May timeframe. We were up around 71, 72. So you can sort of pick your spot there. If you're waiting for a breakout in Bitcoin, I think you want to be paying attention to it. It's had a strong run, like it's moved consistently now for the past 8-9 days, up about 12%. It had that false breakdown under 60 just 2 weeks ago, and now it's already back up towards 70. So it is a tough chase, but it's certainly something that can move fast. And there's a lot of sideways digestion that has been put in place here for Bitcoin throughout this year. So our Galahad trading system is back in this. It's that long-term trend following system. It's back in Bitcoin here. We'll see if we can start to get the breakouts, but we do have exposure in that as well. Now let's talk about China, because China was on the list here recently. We had all that stimulus come through. We had this rip up, and now we've had a pretty sizable pullback. So believe it or not, in just 5-6 trading sessions, KWEB is down 20% from the highs. So if you missed the breakout and you're waiting for that dip in China, it's here, right? So I guess you have to ask yourself, is this fitting a trade setup that looks interesting to you? It looks like this has been basing for a couple of years here. Looks like you've got your breakout and pullback. I think the lows from this week will now just be an important spot to see if this market can hold. I think if you're, bullish here, if you're looking for that emerging, kind of trend reversal back up on a longer basis, I think you want to see, that 31 area hold in K-Web. You could look at FXI. You could almost coincidentally use the same price level, but more like $30.60. And you could use, CQQ. There's lots of different China ETFs or just individual holdings that you could certainly be fishing from. But I think they're all in that nice kind of sweet pullback spot mode. Personally, don't have any exposure at this time. Now, I want to talk about semiconductors, and then I want to talk about Tesla. So semiconductors here, you saw the big move down on Tuesday. So 5.4% down, huge volume coming through. That was all on ASML, which had a 16.26% down session here. Super heavy volume coming in. It is in this corrective state now and is in a drawdown of about 39%. That was causing the pain across the markets, but we had a nice rebound on Thursday, and some of the stocks here, as Nvidia, the big behemoth in this space, tested briefly its all-time highs here, and I think marginally made all-time highs on Thursday. You can see it's kind of settling out right in here, but really sort of picking itself up and from the carnage on Wednesday. So it is, nice to see that we've got the big dog Nvidia that is continuing to hold up and lead the space in general. If we look at SMH ETF here, it's kind of like the Qs where it's not quite back up to these highs, right? And you're actually kind of running the risk perhaps of a lower high. It's obviously too early to declare that, but you are just noticing kind of the relative underperformance here on a relative basis. SOXX looks even a little weaker. Again, another big semi ETF, just the weightings are a little bit different on how the individual components stack up. So let's keep an eye on it. I don't love that the fact that the semis are kind of lagging here, but I think it speaks to, again, just some of this rotation, some of this broadening out in some of the other areas of the market. Russell 2000, which again is just things that I'm liking more on rather than, say big cap tech or some of the old leaders of the first half. So that's the way I'm looking at things there. I want to finish off the video talking about Tesla. Take a look at this chart here. Now, this is not something you see often here. First thing to notice is you've got this big old gap here in Tesla. If you recall, they had their big sort of AI robotaxi sort of announcement last week and really didn't live up to the stock's expectations from that event. We had this big gap down of 8%. And we have gone absolutely nowhere since that day. We have, in fact, now traded basically 7 bars in the exact same range with a big earnings gap above, or I'm sorry, not an earnings gap, just an event gap above. But we do have earnings in 3 days on Wednesday after the bell. So Tesla, I think, is set up for a squeeze, and I have absolutely no idea what direction this is going to be. But you certainly can be confident here that if this continues for 3 more bars and we have this big, kind of gap that stays open up above, then with earnings coming, you're going to be left with very likely an island here or some type of 8 days worth of supply and traders that were buying and selling in the dust on some type of gap up or gap down reaction that will likely lead to a trending move. That's what I would expect. Now, we shall see. But I think it's obviously, really compressed here in the short term, and we have earnings as our catalyst to break out of this. So this is where you could perhaps use options or look at vol strategies to sort of take advantage of, what could be a vol expansion and trending move to develop. And of course, with elections and year-end stuff all kind of happening here. So I don't have a position in Tesla anymore. Had a position in this area. I can't remember where I threw in the towel. I think it was a loss, if I recall, or a break even or something relatively small, but I don't have a position here in Tesla anymore. So we'll see. I am marginally interested in it, but I'm not going to jump in before the event. I'm just going to kind of wait to see what happens here. So that's what I got. Certainly interesting. If you have any thoughts on Tesla, would love to hear it in the comments section below. But that is all of the headlines and price action that I wanted to talk about today. Thanks so much, as always, for tuning in. Every Friday, we do these videos, long form, objective market analysis. Like the video if you liked it, share it if you loved it. And don't forget, we've got links in the description of this video, IBD, our own trading systems, TC2000 downloads, all kinds of cool stuff. So until next time, have a great weekend, and thanks for tuning in.